Well, there's been major movement in China's monetary policy these last hours. The country's central bank, the People's Bank of China, announces that it will again lower the benchmark lending and deposit rates for financial institutions. The move takes effect today, as Yang Chengxi explains.
This is the second time the central bank has lowered rates this year. The one-year lending and deposit rates are both being lowered by 1/4 of a percentage point to 5.1% and 2.25% respectively. Bank officials say the move aims to support China's real economy. Last year's growth rate was 7.4%, the weakest in 24 years.
Since the first quarter of 2015, the economy is shouldering relatively huge downward pressure. Therefore, we decided to lower rates in order to push down financing costs for businesses.
Some analysts suggest that the central bank's decision signals a Chinese version of quantitative easing, or QE. But officials say that this is not the case.
This is by no means a QE, because QE is defined as an unconventional method used only when normal monetary policies fail. The rates lowering this time still falls into the category of normal policy methods.
The lowering of rates is coupled with new moves to marketize China's interest rates. The floating range of the deposit rate is expanded from a previous 1.3 times the benchmark rate to 1.5 times, an expansion that's larger than all previous similar moves. Some believe that as a result, certain banks could hike their rates to the new top limit to compete for deposits. But some experts say banks are getting more rational.
上浮到这个1.3倍的时候
Last time when the PBOC expanded the range to 1.3 times, we saw some banks raise their rates to the ceiling. But after a while, they all moved the rates back down. They're all pretty rational in their competition right now.
多数银行都会比较理性的
China's effort to marketize its financial sector is gaining steam this year. On May the 1st, the country adopted a deposit insurance system. Officials are calling it a major move to ensure smooth reforms in interest rates.
The deposit insurance system protects the financial safety of depositors. This relieves institutions of some of their burdens to set extra safe financial cushions. And therefore, this gives them more room to offer higher deposit rates.
The official says with the floating range now at 50% up and down the benchmark rate, the timing is ripe for China to start liberalizing its interest rates soon. Yang Chengxi, CCTV.